Welcome to the Techno Fundamental Report for March the 20th. Marcus Aurelius, famous Greek philosopher, actually became a Roman emperor. Kind of a long story, but he wasn't born into being an emperor. He was an adopted son. But he was a founder of a philosophy called the Stoicism. And it's about human behavior. And this quote here says, "You always own the option of having no opinion. There's never any need to get worked up or to trouble your soul about things you cannot control or can't control." Basically, you need to have a strategy. And we're going to talk about strategy construction today. You have power over your mind, not outside events. Realize this, and you will find strength. So what Marcus Aurelius is trying to tell us is that you have your own mind, you have your own system, your own strategy. You know, the only other option, and I see this quite a bit, is where people just deal in stock tips. That is nothing more than just a big guessing game. So I wanted to feature Ed Johnson today. Now, he has passed away, and his daughter Abigail Johnson now runs his company, which is Fidelity, quite a large organization. You know, Ed Johnson was asked one time if he had one indicator and he was on a desert island, what would it be? And he says here, he says, and I'll say that, it's the 200-day moving average. We'll look at that in a minute. If there was a simple formula for success and it was easy to follow, everyone would be doing it. So in other words, there's no strategy out there that's going to work all the time. If it did, everybody would do it, and then it wouldn't work anymore. But here we have the primary trend, which is the S&P and the NASDAQ. We can see that, and this would be Ed Johnson's favorite indicator, which is the 200-day moving average. And basically what I think the way to use this, excuse me, I'm trying to line this up, okay, is that when you're below the 200-day moving average, you just have to change your thinking process. You've got to think more defensively and not as aggressively. When you're back above the 200-day and you're in an uptrend, no problem. That's the way to go. Now, the other problem here is something called rotation. Now, you have sector rotation, and then you also have individual stock rotation. So it's kind of out with the old and in with the new. And you can see here that at different stages of the economic cycle, certain stocks are going to outperform and do well versus other stocks. Let's see here if I can get this straight. But anyway, let's look at some indexes. And here we have the NASDAQ. You can see here that we've had a dramatic drop. There's no doubt about it. Now, what we're looking for, as we've mentioned in past videos, is a follow-through day. And a follow-through day they don't always work, but when they do work, you usually end up with a bull market. So the way it works is this, is that the market makes a low. Now, the NASDAQ made a low here. Then you count 4 days, because it just says settle down, just take a little vacation here, and go 3 to 4 days without doing anything. Now you can see here day 1, day 2. Now if this would have cut that low, we wouldn't start at this day, but it didn't. It missed it by about 1 point, so very tight. So we're at 1, 2, 3, 4, 5, 6 days of a rally attempt. So we've surpassed the 4 days. Now, in order to get a follow-through day, it's got to be a meaningful rally. It's got to be a substantial rally where volume is higher than the prior day. Now, you can see here we're not getting volume yet for today, but if this volume was higher, then that would be a follow-through day. But I know the volume's not higher, so we're not going to get the follow-through day. So let's look at some other indexes. This is the mid caps. You can see here's your low, and then you count 1, 2, 3, 4. So we are in a rally attempt. Now the question is the rally going to fail or is it going to succeed? We don't know yet, but we've got to get a meaningful day where volume comes in robustly and you get a robust move in the price. Now here are the small caps. Same type of scenario here. You made your low. You've got 1, 2, 3, 4 days of a rally attempt. Here's the S&P 500. Now the S&P made a low here. So you're only 1, 2, 3, 4 days into a rally attempt. Now if you look at the ETF, which is the equally weighted S&P, you can see that this is actually somewhat outperforming the market cap weighted S&P. And now it's been a long time since that has happened. So you have your low here, 1, 2, 3, 4. It's in the 5th day, just like the NASDAQ. So the equally weighted S&P is starting to outperform. That's a very big positive. So as we see the rotation and we see the different stocks that are going to pop up, we just need to be aware of that. Now, here is the aggression index, still in trouble. You know, we've had a dramatic drop here. We're getting somewhat of a rally, but remember, you know, this was back in the bear market of 2022. You know, you got a substantial drop here, then you got a rally, but then it continued to fail. So that's why the follow-through day is so important, is that we need to see a reversal of trend. We are in a downtrend now. That needs to reverse. Interest rates, you know, the Fed did not raise rates today. They held rates steady. You can see here that on the 5-year Treasury, we're now getting down to about 4%, and we're starting to see a downturn in the power index. So it does look like interest rates have somewhat stabilized. Price of oil continues to trouble me. It's definitely in a downtrend. You can see it with the trend meter as well. But the price of oil is definitely softening and coming down. The other factor, now here's a positive, a couple positives here. This is the number of new lows on the New York Stock Exchange. You can see under 40 for 2 days. That's very positive. So we're seeing an improvement here, actually a very subtle improvement in the market. Now, this indicator is fascinating. This is the AAI bullish survey. Are you bullish? Are you optimistic? Minus the AAII bearish survey. Are you negative? Are you pessimistic? So when the bears outnumber the bulls, that tends to be a bottom in the market. So you can see right now we've got a reading of a negative 40, which is one of the lowest readings we've seen since the bear market in 22. And if we were to go back further, probably even lower than the pandemic low. So the number of people that are bearish, which is a contrarian indicator, but it tends to mark a market bottom. So we're getting record readings here on sentiment. So if you have any questions, please let me know. Thank you very much.